Welcome back to the channel, traders. Today, we're diving deep into a fascinating small cap play that just hit our scanners, showing significant potential. We're going to break down Aureus Greenway Holdings Inc., ticker PUSA, covering its recent price action, the technical indicators that flagged it, and the critical levels to watch. Stick around, because this one shows a compelling setup. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So chart PUSA. Alright, let's talk PUSA, or Aureus Greenway Holdings Inc. This company operates in the consumer cyclical/leisure sector, owning and running public golf country clubs across the US. It's a small cap player with a market cap of $97 million, putting it firmly in penny stock territory, which often means higher volatility and potential for significant moves. PUSA jumped onto our screens at an entry signal price of $3.06,309, exhibiting several powerful pre-breakout and reversal patterns. The stock triggered three key strategies. First, Paloma onto or pre-breakout squeeze. This strategy looks for a tight consolidation range where the average directional index, or AGS, an indicator measuring trend strength, is low, signaling indecision. Price is above its 20-period exponential moving average, or EM at 20, which is a short-term trend-following indicator, and volume is beginning to expand. For PUSA, this suggests a coiled spring, ready to launch after a period of quiet accumulation. Second, dip and top player, meaning strength from the lows. This strategy also targets low ADX consolidation with price holding above EM at 1T, but it specifically requires the relative strength index, or RSI, a momentum indicator measuring the speed and change of price movements, to be above 50, and volume to be above its study data average. PUSA's RSI is clearly in the healthy momentum zone, telling us buying pressure is building without being overbought. Finally, Itozogi, or bear trap reversal. This identifies stocks under recent selling pressure that are now recovering above the EM at 1T with significant volume confirmation. Given PUSA's recent volatility, this reversal pattern is particularly potent, suggesting sellers were fooled and buyers are now stepping in forcefully. Technical analysis deep dive. Show indicators. The signal for PUSA was strongly confirmed by our VWAP and EMA alignment gate. We see the stock's price trading clearly above its volume-weighted moving average, or VWAP, which reflects the average price based on volume traded, indicating buyers are in control. The trend strength, measured by ADX, is above 18, confirming a real trend is forming, not just market noise. The RSI is comfortably between 45 and 68, the sweet spot indicating momentum has started but is not yet overextended. Today alone, PUSA is up plus 18.3% on a massive 753,659 shares traded, which is 1.4 times its 30-day average volume of 532,061 shares, a clear sign of renewed interest. Over the last 5 days, it's rallied plus 31.86%, bouncing back after a minus 8.17% drop over the last 30 days. Imagine PUSA as a golf ball sitting on the green, quietly gathering energy after a rough patch. That's the essence of Paloma onto stock consolidating tightly, poised for a powerful drive. Then, as it starts to roll, you see the dip and top play buyers gaining confidence, pushing the RSI higher from oversold territories, confirming strength returning from the bottom. And for those who tried to short it, the Itozogi sprang short, signaling a convincing reversal where recent selling pressure is overcome by a strong influx of buyers, proving the bears wrong. Highlight levels on chart. For PUSA, our entry signal price is $3.06,309. To manage risk, we set a tight stop-loss level at $3.06,127. This protects against significant downside if the trade doesn't pan out. Our take-profit targets are staggered: T-Pone at $3.08,124, TP2 at $3.09,940, and TP3 at $4.1755. These targets are strategically placed to capture profit as the stock potentially climbs. What's truly compelling here is the risk/reward ratio of 9.97. This means for every dollar risked, there's potential to gain almost $10, which is an exceptional setup. Remember, PUSA is currently 56.4% below its 52-week high of $8.25, but also 100% above its 52-week low of $1.08, indicating it's still far from its peak potential. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Keep a close eye on PUSA's volume. Continue trading above its 30-day average volume of 532,061 shares, especially on upward price moves, would strongly confirm buy conviction. A close below the $3.06,127 stop loss would invalidate this setup and signal it's time to exit. Also, monitor any news related to the consumer cyclical/leisure sector or Orius Greenway Holdings specifically, as industry sentiment can quickly shift these smaller cap stocks. PUSA presents a compelling technical setup, identified by multiple strategies and confirmed by robust indicators. The tight risk management and impressive risk/reward ratio make it particularly interesting for those looking at small cap opportunities. If you found this analysis helpful, hit that like button, subscribe for more in-depth breakdowns, and let us know in the comments which stocks you want us to analyze next. Until then, trade smart.